Hi, everybody. This is the Bitcoin live show with the Minotaur and the Power Law teams. I am here with Marcos and Sebastian from the Minotaur team, and I represent the Power Law. So in this show, usually we look at the most recent price action. We compare the price with the Power Law. We see where we are. We often talk about um, global liquidity, not always, but uh, I will tell you what is the story with global liquidity in a moment. But then we also dive in local liquidity, where Marcus is using his amazing charts and his deep understanding of how liquidity works at the local level within Bitcoin, basically the order book. Anyway, let's dive in. You can ask question. Please ask question. You should be able to ask question. Right now, the show is on many different channels, both my channels, but also the Manotaur channels. So please ask question. We like to make it very interactive. This is should be able to be done on YouTube, on Twitch, and even on X. So write comments on X if you like. All right, I'm going to share this graph. So this is one of my latest indicators. I want to remind everybody we have more than 15 indicators. We have a community, it's all on Patreon. I can give you the link for that. Here it is. So you can look at this. You can join us if you like and have access. Right now, these are two more indicators that I have developed, and it will be a total of 17. And the price never goes up, basically, no matter how many indicators we're going to add. And as Bitcoin evolves, it's nice to have more and more indicators that do different things. So what this indicator does? Well, first of all, you can see here we are drawing the general power law. Is a two way of doing it in an adaptive way, and the red line is using the entire data set and using the latest data we have. And you can see basically Bitcoin is flirting with the power law since many, many months. We are simply moving along the power law. You can maybe say that this is happening since March of 24. We are basically oscillating. We had a correction, then we went up again, and we are simply oscillating around the power law. And this has happened now for a long time. Of course, we are claiming the general pattern of Bitcoin is the power law, but we are really, really close, following very closely. Many people are surprised by this because usually, the patterns that we saw in the past is we stay in the region below the power law for 2 years. Uh, we call that the core power law behavior. We did this actually these cycles too. We were in this region between the support. This line is what we call the power law support. We stay there almost for 2 years between, the general trend that is a compromise between the tops and the bottom, and we stay there for almost 2 years. And then we're supposed to have um, a bull run that started in November, and kind of in November we had this behavior where we cross the power law. Everything seems exciting, and usually this is when actually the power law is challenged, um, and we leave a power law sometimes by a factor of 5, or 10, like in the previous bubbles. So we are supposed to leave a power law and reach. I calculated a target of 200K in around November, and then didn't happen. In fact, we had a correction here that brought us below the power law that never happened before. Um, kind of summarize things that I say before, and then since there we are even closer, even more, attached to the power law. It seems almost to be Bitcoin as a fear to leave a power law, and every time we had some kind of a mini rally where we thought we were supposed to go away finally from the power law, we actually go back to it. So this is like general pattern. What this indicator does is showing this quantity. I discussed it. I'm not going to go into many details because I discussed it last time when, because Marcus was not here. I spent a lot of time describing what this quantity is about, and you can watch that video. I will make also some dedicated video to this indicator. It's a very powerful indicator, but basically it shows this quantity called the daily slope. So imagine, to make it simple, imagine that you're fitting with a power law every single day, and the general tendency for these power laws is to follow the one power law, right? So we're in average, some of the slopes will be steeper than the power law, some of them will be less steep. When you average them out, you get the power law. It is really cool and interesting. And I'm calculating here the local slope in two different ways, right? In this lower panel. On a fast track, that is the yellow curve, and then that is average over a few days. And then on a slower track, that is 90 days. And for the 90 days curve, that is the blue curve, I'm also calculating the range. This is 1 sigma deviation in both directions. So it's kind of most of the data. You can still have data outside this range. This will be extreme values, but the majority of data will be within this range. And so it's very interesting.
Somebody's playing the marachas, huh?
Yes, we can mute yourself, guys, if you do something else. I'm going to do this for you. Okay. So just a second. You can mute yourself if you type or do something else, please, guys. Thank you.
That was my fault, Giovanni. You can blame me on
that. No, you can do it if you need to answer anything. Just mute yourself.
And I guarantee it's not me.
True. Anyway, so anytime the yellow curve crosses this green and red line that represents the range of this value, I call it mu. It's or you can call it daily slope. It's a form of kind of normalized return. It's as being stable. That is the beauty of it. It already contains, it already adjusts for these diminishing returns that is due to the power law. But the quantity mu itself is stable because we kind of adjusted for this change. The main reason why we do this is to show how stable Bitcoin is and how basically it's doing the same thing. You see how even the range of oscillations is basically the same over many, many years. It changed in 2018. The average stayed the same. The range jumped in 2017, and then it stayed also stable. So this basically Bitcoin is doing statistically the same thing over 8 years. It is just amazing. So we can check locally how it's doing by comparing this fast and slow curve. And you can see like I was saying before, we can create these green dots and red dots every time we cross the yellow curve, cross the green or red line. And these are pretty good entry points. Like in the last few days, for example, see these you can identify this entry point, this exit point. All these are considered low entry points because they're kind of at the limit of the usual range of action of Bitcoin. So right now we are experiencing, it's kind of obvious because the price is low, but it's interesting to see that statistically we are in this range. And usually this should be mean return. Of course, we can go even lower than that, but this will be kind of unsustainable values. You see what happened here when we really crossed and went a little too far. Very soon we had a correction. So we should see a correction pretty soon, according to this indicator. That is the main analysis. And I want to give enough space for Marcos for his comeback, and we need to look at the liquidity chart and see what are the updates for that. If you have any question, guys, about these, please let us know, and we will answer at the end of the show. Okay. Thank you. And I will let Marcus continue the analysis.
All right, let me share my screen here. All right, can you see that and hear me? Can you see me? Can you hear me?
I can see you and
Can
hear
you
you.
hear me? All right,
Yep.
awesome. Okay, so I wish I had better news. However, the we are currently pulling back, obviously, and one thing that jumps out to me right now that I'm still holding my hat on is we have not finished the work at hand. So we're still on a long-term basis. We're still going higher because we're liquidating the short side of liquidity. Um, so as we zoom in, wow, somebody's got a Formula One. So as we zoom in here, uh, to take a closer look on a local level, we are obviously been pulling back for over almost 2 months now. Now, what is very promising, just remember the market has to make a lot of people wrong to all it has to do that, right? It can't there's no way for the majority to win. It just not it doesn't work that way. So what it does is it makes these extremely impulsive moves that like this. We basically hit this resistance level here on this localized area here at 118. We hit that and we rejected hard off of that. Now that rejection is necessary to induce short participants. The market needs shorts, right? The reason we're not going higher right now, presently, and we've been in this range for a while, is we need more shorts. What's been happening lately, if you can look at us, there's a lot of statistics going on, like put call ratios and things of that nature. We've been getting a lot of longs, even as the market's pulling back. There's been lots of longs coming in, and we had a little bit of discrepancy on the short side. So the market's going to hang out here until we get enough shorts. So what we're missing here is this is very the promising. The good news is this is internal liquidity right here. If you notice that when we get internal liquidity, I call this fried chicken. The internal liquidity gets taken almost highly high probability. It's like 90%. When you see this internal, the market goes after that very aggressively because it's inside of the range, right? There's a range here, and internal liquidity is trapped. It gets trapped in there and it gets swept up, it gets liquidated. So it's very promising that we have this nice pocket of internal liquidity centralized at about 121, 122. That's important because that was created off this very strong impulsive move down and it brought these new shorts in. So the market is inducing more shorts because we need to bridge. We need to have a way to get up to this level here. If we can get here, then we can go higher. So we don't have that bridge. So it has to create this internal liquidity so we can get the price from where it is now higher. The market currently, this liquidity here sitting here, this is what's called external. It's external to the range. And because it's external, it creates its own like extreme, it's an important level, it's a strong level of support, right? So we already have a value area high here, and this liquidity here is like a level. And the reason it's important, the market doesn't really want to go after this liquidity because this is the return liquidity that we need when we go down, when we correct. You might call it a bear market. When we get into the bearish phase, then it'll come for this liquidity here. So right now, it doesn't want to go after this liquidity. Even when we had this extremely strong move down, it went all the way right to the doorstep and then reversed, where it made you think that it was going to take that liquidity, but it doesn't want to take this liquidity. It's just impulsively going after it to create the return, right? So, having said that, it doesn't mean it can't do it. It can. Anything can happen. We could lose this level. However, if we lose this level, then we start breaking structure. There's a bullet. There's still a structure here that's remaining intact, right? We have a high, a low, lower high. We still can put in an equal low or higher low, and then work our way back up. But if we lose this structure, this external liquidity here, which is very important, if we lose this, then we put in a lower low, 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 and then we who knows what can happen after that. So it's important that we hold the structure. It's very promising that we do have some internal liquidity trapped there. This will be taken. It's just a matter of when. So let's take a look at this area right here. Let's look at this area. We're going to zoom in. I don't usually do too much zooming in, but since G Money Geo gave me a little bit extra time, let's take a look at this area here at a lower time frame. So we're going to go to the 4-hour, and let's take a look at that. So when we look at the 4-hour, we can see a little bit better what's going on here. So we're looking at the same area here. This liquidity here is the liquidity that's isolated. That's the internal liquidity. That's where we're going. The problem is, the reason we're not going there yet is we don't have any significant short side liquidity to fuel us and get us there. We're cut off. So the market is doing these impulsive moves down to induce liquidity to come in here. That's what we're missing. It's coming, just a little bit, might take a few more days. So what I'm doing is, obviously, I'm accumulating these long sides and waiting on this short so we can come back. So here's an example of that. When we came down last time, the reason we didn't rocket straight back up was we did not have the liquidity to take us there. So what did we do? The price hung out at the lower level until it induced enough short side liquidity to give us the path that we need to get higher, right? So that's what we're missing right here. This, when we get this block here, right here, then we can go higher. So we might hang out down here a little while to induce. They're already coming in. I can just give you a little sneak peek there. They're already coming in to induce that internal liquidity that will connect to this, and so we can get up there. That's what we're waiting on. So back to the big picture, and then I'll turn it back over. What we just looked at is this is already in place. This is going this way. We just need a little bit of help to get us up there. And then once we start hanging out here, then that brings in the all-time high and all that kind of stuff. So that's what's going on right now. The waiting game.
We do after that. We did that in Dubai for a few weeks, didn't we?
Yes. Yeah.
So we still have
we're waiting game. Yeah.
So it seems that red region above us, right, is still there, is still unfulfilled.
Still there. That's a lot.
And these are what, 125, right?
Yeah, that's at 125. And if you notice, the price went away from it because that would have imbalanced a lot of market makers' books right there, taking on all that extra short side. So what they've been doing here is accumulating down here, accumulating, so we can come hit that hard. And what's really promising is we don't get a lot of internal liquidity on the day, on this chart, on this time frame, but that's very promising right there to see that internal liquidity stacking in right there. Yeah, that's what we need to get up there.
That is what
that's very promising.
Just before the peak, right?
And on this drop here, we didn't have it here, but we got it now. So that's good. That's a good sign. Positive sign. And hopefully,
any idea on time frames? What would be the time frame?
I would say, like, if we just use the past as a gauge, right? We're kind of like right here, right? So we might have another, could be another week. We need this internal liquidity to kick in so we can get up there. So we may have a week here more. And that's kind of what they've been saying on social media, that there's a seasonality effect, that when we come into when we come into October is usually a good month for Bitcoin. However, that first week could be soft. So we're coming to the end of this week. So that kind of puts you right where we need to be seasonality wise to start moving over here. Yeah.
It seems
Yes,
that many people are a little bit exhausted,
Yeah, it wears you out. It wears you out. All I can say is do like the market makers. Buy like they do. Buy it, and then when it moves over here, sell it,
Yeah, that is basically what our bot is doing.
That's
This
what
is
the
why
algorithm does. Yeah, that's what the algorithm
this is why
does.
we are insisting so much on these guys, because there are no dull days with the algorithm, right?
No.
So what do you think, Sebastian? What can we say about that? Do you have some charts?
Yeah, well, that's right. Let me share my screen and I'll do the entire screen. And everyone just let me know when you can see, because I want to do a fun little exercise today, zooming out.
Yeah.
All right, cool. So for anyone new that's joining, welcome. And we have an algorithmic trading system designed specifically for trading Bitcoin. It's unique in a number of different ways. So what I mean by this is it can be used using USDT. So if you want to use stable coins or a flat balance, that's not a risk asset. You can use it to trade Bitcoin and then grow a USDT stack. But there's also unique features with our algorithm that allows it to run on collateralized assets, particularly Bitcoin. So what I mean by this is you can use supporting exchanges to collateralize your Bitcoin and post it, and then gain yield for holding your Bitcoin, which is a very, very unique approach. Now, they both have their advantages. And at the end of the day, you have to decide what you really want to do. For Bitcoin hodlers, it's really amazing because you can continue to do what you've been doing and gain yield on top of that. Or for anyone just sitting in the market with USDT, not knowing where to necessarily invest. It can get so noisy and so messy at times, understanding where to put your money. So it is something that can give you safe, reliable yield over the long term. And what I want to actually show today, before we go to the current price, because I get asked a lot of the time, what's the strategy around when the bear market hits? What do we do in the bear market? Do we have to change the settings? Should we be shorting in the bear market? And today I kind of wanted to show that when you use the power law as your floor, you don't actually really need to worry about the bear market. The goal actually is to be running in the bear market, and I'll show you why. So what I've actually got on the chart here, this is not today's price. This is the double top from 2021. And the reason I wanted to show this is that we had two scenarios where Bitcoin topped out and then had massive rejections. The last top out, the second double top, the end of it, where we peaked at 70K, ended up seeing a massive bear market. So what I wanted to show was how the algorithm traded the run-up and then traded those stressful scenarios, because it's very important to understand. So obviously in 2021, back end of 2020, Bitcoin went on a monster run up to this point here at around 65K. Now, once we hit this initial top, we had a rejection of around 56%, right? So this is not a small move. This is absolutely massive. But just to zoom in and show you what the algorithm was doing during this time, the algorithm was not stressed and worried about cascading price. What it was looking to do was to simply ensure that it buys Bitcoin systematically at the right time and in the right places. So it makes its first buy here, and this is important because the algorithm's not perfect. Its entries are very, very good, but sometimes it will find the top. And typically, when you're doing any type of regular DCA-based trading, you don't want to find the top. But when you've got something that's dynamic, I want to show you that that actually doesn't matter. So we actually almost catch the top here. We make our first buy here, and the market starts falling very heavily. From this point, though, since the algorithm doesn't have emotion and it's not worried about what the news is telling it or what every article online saying Bitcoin is dead, it's just buying because that's what it's been programmed to do. And as you can see, it slowly accumulates bags all the way down to 28,000. Now, this is kind of where after that first top we bottomed, and as we can see, price rallies up, and at around 40K, we close all of our positions in a profit, right? Now, this is really important because this was the first sell-off, and that was nearly a 60% crash where the algorithm handled it with ease. And I'm not trying to sound cocky, but it bought systematically at the right times and allowed it to close. We're not doing voodoo and we're not doing magic here. We're buying an incredible asset at the right time, which is going up in value. And that's the beauty of this, right? This is not, all Minotaur. This Bitcoin allows us to do this. And this is what is so cool. Now, if we pay attention to this second run up now, right? We hit 40K and Bitcoin goes on another monster run. As we can see, we picked up some really nice positions on the way up, but this is basically the end. And I remember this day very clearly. This is where Bitcoin had its double top and we hit 70K and then we proceeded to have a really big bear market. And I want to show you guys what's so cool about this, because we start picking up positions. Now the algo did pretty good. It didn't pick the absolute top, but it still started buying at around 56K, right? So we did actually manage to shave off around 19%. So the algorithm actually waited for Bitcoin to fall 19% before it bought. Obviously, it didn't do that on that peak over there, but this time it did. So it shows that although the algorithm is not perfect, the signal strength is still very, very good. And more often than not, it's going to stop itself from picking the top. Now, we continued to DCA down all the way to about 30K. Market comes back up, we take profit, right? Now, this is what's important. We're already out of the market liquid at 44K. Remember, everyone holding Bitcoin who is buying at 70K, and there's a lot of them, they're stuck now, not to make profit. They are stuck at 68, 70K to break even. And I'm going to show you how long it takes them to come back to that point and why, if you were holding Bitcoin and using this during periods, you could have actually been gaining yield on top of it the whole time. Now, we come across a little bit more and then we get the monster sell-off, guys, right? Bitcoin starts to really, really sell off. And we go from around 41K all the way down to 15K, which if you go back and look at Giovanni's Twitter, he did a post around this date saying, hey guys, I believe the bottom's in. And it was around 15,000. So as you can see, what's interesting is that the algorithm systematically buys, and then I want to show everyone the last buy that the algorithm makes, because this is pretty cool. See that there? That's the absolute bottom of where price went. And the algo literally bought that bottom. And from that point, we come across and then boom, takes profits on all of its positions. So, for anyone that's wanting to know what do we do in a bear market or how is the algorithm going to handle it, here's an example showing that
this
actually,
is
if you just...
This is marvelous. It's exactly...
I'm glad you're enjoying it. I'm glad you're enjoying it, yeah. So... Yeah, well, it's important because people want to know, what is the strategy? Well, the strategy is always buying Bitcoin. It's just understanding where and how to buy it. Now, me, Costa, everyone, right? As humans, and this is not a knock, but we can't do this. We can't sit awake and understand where to place perfectly executed buys. So once again, we're not doing voodoo magic here. We're just buying at the right time. Now, as we come across, as we can see, we go sideways for a bit, but we're still trading, and now we start running up again, right? And now we're going on the big run all the way across to kind of where we are sitting right now, right? And I want to show everyone this because this is important as well. As we can see, the algorithm takes profit here at around 117K, price moves across, and we start buying again. So the point is, right, it doesn't matter where you're sitting in the market, right? If the algorithm...
For a moment, I want just to make a big reminder that the ideal way of doing this is not selling. We're not talking about selling your Bitcoins. We're talking about buying and selling futures. So your Bitcoin is still growing and you're getting all the exposure of owning Bitcoin. So if you bought the bottom with DCA, that is good. Or if you didn't panic and you held your Bitcoin, you are recovering. On top of this, though, you're buying all this cheap Bitcoin and selling it, buying, selling it. And these gains can be used to buy more Bitcoin. In fact, imagine, if you don't mind, can you go back to after that bottom?
How long did it take, Sebastian?
Yes.
Was supposed to show how long it took.
I will show that in a second because that's a cool thing to look at as well. So let me go back here.
So You see here when
Yeah, I just want to find this. I want to find this absolute bottom,
when
which
we reach
is
this bottom, we
we're close
started
to
to
it.
buy,
Yeah.
right? And then
It's 1 sec.
Yeah.
Sorry, Giovanni. I'm trying to find it.
Yeah.
Here it is.
So we
Here
bought
it is.
here, then we sold. We didn't wait too long, right? And this shows even at during a bear market, there are opportunities like this, right? So you are selling at this small little recovery that Bitcoin had because it doesn't take much, right?
20,000, Giovanni. We sold at 20K.
Now you can use that gain to buy Bitcoin very cheap. So you have extra money to buy Bitcoin at a very cheap price, So it's this is why I call it HODL plus, right? It's hodling, but with this additional money making on top of it that you can transform into Bitcoin at any time. Anytime you see these purple lines, you can use it to buy more Bitcoin. So imagine how many opportunity you had here to buy more and more Bitcoin. So go ahead. Sorry to interrupt you.
No, my pleasure. And Marcus brought up a good point. So this is what I wanted to show everyone earlier, that just so everyone's aware, and maybe we should actually really draw it from the first top because there would have been a lot of people who are holding from there, but we'll be fair and we'll draw it from here. So if you bought Bitcoin at 70K, which just so everyone's aware also, there's data out there to show you that the average person buys Bitcoin at the top. They don't buy it at value. So for someone that tried to buy Bitcoin, they would have waited 855 days to break even on their position. So that, right? That's an impact point here, right? We're talking about 855 days to break even, not to make money. I'm not talking about getting excited and making a profit, to break even, to get back to where they started. Now, here's the real question. How many people do you think held that drawdown? Because I could tell you most people probably sold at a loss, right? Because the game, if you don't understand how to play it, will trap you. And, that is kind of what I wanted to show everyone today and really put emphasis on understanding that if you know where the power law bottom is and the algorithm can buy in that zone, I don't think you can do much better than that. You're naturally trading Bitcoin's natural cyclical behavior and you're respecting and supporting its baseline price, right? Which allows you to have success long term. So that's what I wanted to show everyone today. Thanks, Giovanni.
Fantastic presentation. Costa, you're back from
we're back and we're off on Monday actually to Singapore to Token 2049. So if anyone's out there who wants to come say hi, Marcus and I are going to be manning the stall in Singapore. Come say hi to us.
Fantastic.
Should be fun. Yeah.
Be glad to hear from you.
Just to add to what we've been saying is that this opportunity is a really good. Have we looked at the trades for today? I can quickly have a look at that.
Yeah, please.
Yeah.
And again, for anybody that is interested in joining in and using the system, we have an address here, right? You can go to this website. There is a webinar where we go more into details of how it works and what is behind it. You can also DM me on X, and I can give you more details and talk to me. But it's really an amazing opportunity that I think it should be almost mandatory for every Bitcoiner to have some way. I'm not saying this system, but any way to do HODL plus because it's really difficult for anybody that particularly if you're a young person, to get to a place where just holding Bitcoin will change your life, right? Unless you are a top-notch job and you don't have a family, you can save, etc. But if you have even a small yield on Bitcoin and you're doing it in a clever way, you can multiply your gains by big factors. So it's something that people should really start to consider and think about very seriously. Anyway, Costa, go ahead.
Yeah, if you just bring up the screen, we'll just have a look at the trades today. I think they're
Sure.
good to look at. So we do have
I don't see your screen.
it's sharing. I think you got to
Let me do something. Maybe because we have up to 10 guests. Okay, yeah, you should be able to. This was mine. Show me. I don't see yours.
Yeah, it's coming now. Here we go. Sorry.
Okay, now it is. Yep.
Yeah, so the market's fractal. We always say that this is a lower time frame. This is also an update to the settings that we've rolled out on. Actually, I'm going to put this on the 10-minute because we're running now on the 10-minute, right, Sebastian? Yeah.
For the higher frequency style, yes.
So you can just see here how beautifully this is. My computer's really slow, my internet. But you can see the entries here down at 109, 208. Another one yesterday at about 112. Another one before that, 115. But just see how aggressively this has brought down the weighted average price. So we entered here at around 117. We're currently down 112 with a take profit at 114. So again, just illustrating the point of how when the market gives us these corrections, these pullbacks, we're able to DCA and take profits by walking the price down. So extremely powerful strategy. And especially if you're holding Bitcoin, it's a way to be you're almost hedging your Bitcoin position, right? Because your Bitcoin's going down in value, but your trading profits are going up. So this price action is good. We're all looking forward to breaking through into all-time highs, but these kind of big drops do provide us with a lot of opportunities. So I thought just good to look at those prices.
It is, Costa, kind of a thing where once you get comfortable, and it is a mindset shift, because once you get comfortable with it, actually you kind of want, now we all want a bull run, but when you DCA, you want price to fall as well. So the fear kind of starts to dissipate, doesn't it? Once you get used to this style of trading when the price falls.
Yeah, absolutely. And I actually want to put it back on the 15 because it gives me just a bit more latitude to see what's going on. But Giovanni was saying it's always exciting when you're running this algo. Just have a look at here, right? So we've gone from 117 down to 108. We've taken profit. The market's kind of chopped, and we've done all these entries and exits. And now we're back here doing a nice big DCA. So this is really exciting price action, and it's just sitting between that 120 to 108 range. You can see how many entries and exits have happened. Really,
many people always tell me, the biggest value that they get from the power law is that their conviction is strengthened, and also, I have almost every day people send me some messages say, "Listen, thank God for the power law because it makes me more calm, it makes me more relaxed about I know that this is a long-term trajectory." If people start to use this is in addition to that, because that happened even to me, because even if I am around since now almost 12 years in 13 years in the Bitcoin world, it's just human nature, right? The price corrects, it goes down, you feel a little bit scared, right? What if it goes to zero, right? And it is never going to happen. But at the same time, you like when the price goes up. Well, I still like when the price goes up, but now I'm much more neutral, because in particular, in fact, I like it when it goes up after it goes down, because I know that I accumulated all these extra Bitcoin, cheap Bitcoin, and then when it goes up, I'm taking advantage of that. In particular, if this going up and down is going to be basically the future of Bitcoin, we are going to oscillate around the power law. Every time it goes down, you are collecting. You're basically Marcus is saying, you're getting the groceries. You're getting the
snacks ready for the road trip.
The snacks, you're getting the gas for the car. This is what you're doing, and I'm happy about that. I say, okay, great, look at this, and I hear that ringing bell, because I'm working on the computer, my trading view is on, and when there is an alarm, every time he buys, it rings the bell. Sometimes it happens when I'm sleeping, of course. But and it doesn't matter if it is a bell associated with selling, and I made more Bitcoin, or with buying, because okay, yeah, the price corrected, we are buying cheap. It's incredible. I don't know how else to say this. So I really invite you to explore this with us, to see what it's about. And it's beyond us. We are not trying to do a sell pitch, even if we are a company and we are trying to do a business, and it's a legit business. It's really a passion. I'm very passionate about this approach. I really believe that this is where Bitcoiners need to start to shift their focus and think in a different way about what it means to be a Bitcoiner.
Absolutely.
100%. Well said.
Some of these comments are really good that are coming through.
Let's look at them. So there is something about October. What do you guys think about that?
Yes, there's a seasonality to it, of course. There's a seasonality because there's a seasonality to liquidity, monetary cycles, economic cycles. So yeah, there is some seasonality, and it also aligns with the power law. There's a not only a price level, but there's a time level as well. There's a time for things to take place and play out. So yeah. Yep.
Yeah. In general, the end of the year is pretty bullish. Again, we don't know. We are in new territory.
Yeah.
But there are some reasons why the market can be bullish. There are a lot of companies that close their books at the end of the year. So if they do something, they are trying to do it at the end of the year. There are some pickup of activities. Some people, in particular in Europe, they take long vacation during the summer, so now they are back. And so there is some historically there is some uptake in the market at the end of the year. Now we don't know if that means a super bull action from Bitcoin to actually maybe catch up, but I like the liquidity chart that Marcos showed, and that 125 at a minimum seems reachable. We should go back to that, and maybe even higher. Like beating basically the all-time high. All right. So somebody's telling us from Florida. See.
All right, Lakeland in the house. All right, nice.
Okay, here. What do you say?
Okay, so where do we think it goes after the 121 liquidity is taken? Well, that puts us in the next level. So yeah, that brings in the 125, 130, 140. All that starts to come in play. But we have to have a way to get there. So yeah, that opens the door for that higher prices. Now that being said, it doesn't mean we're going to go straight there, but we're heading that direction. Yes, probably around November, December. Yeah.
And our friend Dario Vullo.
Hey, there he is.
Yeah, there he is. The D.
Dario is actually using the bot. He's doing very, very well with the bot.
Yeah.
And the topping, how this year, you guys can tell. In the past, we say 200K, and that 200K was not an opinion, right? It's not about opinion, it's all about math. It was based on this decay of the peaks that seem to have a very precise pattern. And we say, look, if this pattern continues, this is where we are going. And actually, many people told me when I did that, it was too conservative, right? Everybody was talking about 400, a million, and they meant this year, not, now they say this cycle, which cycle you're talking about. They meant this at the end of the year when usually the cycle ended. But now even that seems optimistic, right? I would not be surprised if we go to 135, 140. Even just to stay on top of a power low, by the end of the year, we should be around 130, something like that. Otherwise, we will be below the power low. So
Right.
I think we are simply, even at a minimum, we are simply oscillating around the power low. So we should do at least 130.
Yes. Concur.
What about the business cycle? Yeah, I look at PMI, for example, and Bitcoin strongly correlates with PMI. And now PMI is pretty flat, and usually it does peak at the end of the year. So we don't know. We are kind of in a new territory where usually these cycles you already see hints that we are going up, right? It doesn't wait until November and then it jumps all of a sudden. You start to see an uptick of a cycle. The bull started, I say actually November. It usually lasted 1 year. It took 1 year to bring us all on the top. It's possible that some people talking about extending it to January, February. Everything is possible, but it's unusual. We don't do that. So we will have to see. And you guys can answer that too.
I can answer this one. So if you were, I'm not sure if you just joined, if you were watching the presentation I did earlier, the purpose of that was to show that the power of going long at the right time on Bitcoin, regardless of whether you're at the top of the market. So it's always better to trade long. Historically, especially, I can tell you, being a developer, the back testing and live testing we've done is historically it's not a good idea to go short on Bitcoin unless you have a really clear understanding of leverage and margin efficiency. So typically, especially if you're new into this space, run it long because it's so forgiving and it works.
Very good. Love you guys. So again, Dario, I look at ISM and PMI. They are very similar, and it's a complicated thing. I need to go back. This is the comment that he was making. I need to go back and do some more sophisticated study looking at granular causality, but there are also other measures, like one of these measures that almost nobody uses, that is basically how coupled cycles are, because Bitcoin has its own cycles, and it's a question, are we coupled with external cycles, right? Are we following them closely? And that is a question that needs to be answered. Like, for example, I looked in the past, this cycle that many people mentioned that as a 5 years cycle duration, and it was supposed actually to peak in November because it was not completely aligned with Bitcoin. And evidently it's not happening, but it's possible there are other cycles that we can look at and see how they correlate with Bitcoin, etc. Right now, nothing is happening, right? Much. So we need to go deeper and see if there are other cycles that Bitcoin follows beside the 4-year regular cycle that we followed in the past. This is for you, Marcus.
Okay. All right, Marcus, why don't you use your X account more actively?
He's too busy. We're giving him too much work. That's why.
I've been telling him that. I've been telling him.
That would be wonderful if you update your liquidation analysis. Yes, I'm going to do it. We've been in Dubai for 3 weeks. I almost turned into one of those Arab sheiks. I had the full, dress, and I just been out of touch. But yeah, now that we're back from there and I'm kind of getting back in the sync and everything, yes, I'm definitely going to keep doing it. I'm glad you reminded me. I'll never hear the end of it because Costa's been telling me that. So yes, I'm with you. I'm going to do it. Thank you.
Very good.
Definitely.
Sorry, guys, we're flying him all over the world at the moment, so he's.
Yeah, but I got to do it. I'm gonna update it. Yep, definitely. Thanks.
Yeah, And again, one more time, the ASM has its own behavior. We will look at how strongly correlates with Bitcoin. It's not 1-to-1, it was clear that Bitcoin follows its own 4-year cycles, and they had some level of correlation with other cycles, but it's possible that drive is over. I don't think it was ever associated with a scarcity of coins, due to the halving. It was more like some kind of a psychological effect associated with halving, but then it's kind of dissipated, and so it's possible that Bitcoin is going to follow more traditional cycles. We need the data, because even if ICM does that, we don't know if Bitcoin follows, right? We will need the evidence for that, and we don't have it yet. So that is how my position about that is. I don't want to speculate. I don't want to wishful thinking. I want to see the data. Once we have the data and the data say, yes, now we are locked to these new cycles, then we can use that information. But until we have the data, we should not, we can look at it, but we should not assume that it does happen, okay? Because then we do what everybody else does, that is just making up stuff, instead of basing everything on data. And the entire team here, it's all about being driven by data. That is what we do. Okay, guys, I think this made a very nice show. We were just below 1 hour, and I think this is good. We kept it compact. Maybe one more question. We can take this last question. Is it possible to adapt the Monte Carlo simulation so the price prediction and the probability are not symmetrical? Yeah, this is so one of the application of a new indicator is actually this Monte Carlo simulation I'm doing, and I did it on purpose to do it symmetrical because that is kind of less biased. But yeah, I'm going to add it as an option where we can look at the latest data and see if there is a prevalence up or down. And instead of using entire history of Bitcoin, we can use the most recent mu and sigma, and then it will be more. You will start to see that it has a tendency to go up instead of down, or vice versa. It depends on the more recent history. Okay, people are coming in with more questions. If there is, we can, we can keep it maybe within 1 hour. So we can keep going for another few minutes. If it doesn't happen above, then don't we see deep drawdown next year? Okay, right. It's kind of an assumption that makes sense. I think a lot of the drawdowns that we saw were overreaction. After all, the reason why we had a power law in the first place, right? Even if we had these big bubbles, is because we went up as much as we went down. And so for some reason, right, Bitcoin likes to follow the power law. So whenever it abandoned it, it needed to compensate by going down. Now, if we follow the power law, maybe there is no reason to compensate, right? So it's again, we don't have data for that. We have to see it. But this one is a reasonable assumption. We can make it almost like a scientific hypothesis. This is the hypothesis. We need the data to confirm the hypothesis or not, but it's a reasonable one. And to be honest, look, I will not mind for us to follow the power law closely for the next 10 years. People thought that the bull runs were exciting. There were opportunities for few people because, they knew when the bull run happened, or maybe they had some evidence for it. Maybe they open very leveraged position. Maybe they play with that. One of the things that I think a lot of people are looked into was the shit coins, right? They were buying shit coins because the shit coins used to go faster than Bitcoin during a bull run. So it was a time for speculation, and maybe, they couldn't wait the 10 years that it takes to have a noticeable increase in your Bitcoin value. and we wanted to do that 100 per in 1 year, you know. And so, but look, it's almost like lottery because few people won. I made one time. I bought some shit coin for a few $1,000s, and they made $500,000. Okay, but it's almost like I won the lottery. You know, it was nothing that I attribute to my ability or anything like that. Like one person wins and 100 lose. You know, so it was always a lottery. And so if we have something that has both the long trajectory and is predictable, and then we have also oscillations around it and enough volatility, then it's great. It's perfect. In particular for this particular approach that we have, it's just ideal for that. So I will not mind it at all. You know, what do you guys think?
Yeah, look, I'm in agreement. I think that it's just another reason why this tool is so powerful. I think we need to start getting creative with what we can do with this asset, and
Yeah,
that's what we're doing here. Yeah.
Sebastian, what do you think? What do you think about this? Will you be okay?
Yeah. Yeah, I mean, you know, at the end of the day, as long as we have somewhat continued volatility, then what we do is going to churn over and over again, regardless of what the market does. But, you know, definitely it'll be hard to see a huge, gigantic correction without, you know, a little bit more upwards pressure. I find that hard to believe, but also, you know, sometimes Bitcoin does things we don't expect. But I think the point is, what I shared earlier with I presented, that if we do have huge corrections, it doesn't really matter. You just have to understand how to manage the risk, and then everything takes care of itself.
Exactly.
I think it's far more likely that we go to, you know, 160 and back to 70 than we go from 109 to 40. I don't see us going to 40. That's just not really going to happen now. If there's not going to be a cycle, if we're not going to have a bubble, I don't think we're going to have a massive drawdown. Could we go to levels that we saw earlier in the year with the tariff news? Maybe. I think that bounced off 72, but I don't think it's going back to power law support at this level, because that's where we've got our eyes always, the power law support, right? And we're protected down to those levels. But I do think it's far more likely we touch the power law support again in the future. And if that comes with a bubble, it comes with a bubble. If it doesn't, I think we might follow what you said, Giovanni, the power law up. Yeah, we need a bit of a blow off top to get that crash back down, I think. Yeah. But the window is closing.
Yeah. Okay, guys. I think we covered a lot of interesting topics. We will do this again next week.
100%.
Yeah,
we might be in Singapore on the
Okay.
flight. Maybe Sebastian and yourself will be able to do it, and then we're back to.
Yeah, I'll be here.
All right. Okay, guys. Bye, everybody. Thank you for your
Thanks, everyone.